Jan, thank you for joining me today. I really enjoy our partnership. You're a great resource for me here at Guaranteed Rate, and
Thank,
it's awesome that you've always been on top of things and taking care of our customers. And I just wanted to let you have the floor a minute and tell us a little bit about yourself and your specialty here at the office.
I've been in the business a very long time. I used to think the longer you were in the business, the better you were, and now I just feel, you just say a long time. And I've owned mortgage companies, I've owned real estate companies, I've owned escrow companies, and now I just want to deal with my clientele. That's it, and I love
Yeah,
it.
awesome.
So yeah, so that's my history.
Well, right now you're a reverse mortgage specialist here at the office,
Right.
and when I talk to a buyer or a refinancer where the reverse mortgage appears to be the right solution, you're the first person I call.
Perfect.
And it's a great way of having a good partnership because you specialize in a very complicated process. Um,
Very.
Tell us, who is a ideal candidate for a reverse mortgage?
Well, an ideal candidate is anyone from age 55. That's the lowest that it goes to on up. The FHA reverses, you have to be 62 to do that, but the jumbo reverses go down to 55. So basically, anybody who wants to perhaps keep their money in their accounts that they're making money on, maybe not today, but they want to keep the money there, or they just want to buy a home that they want and love and not have a mortgage payment. So that's the main thing that people
Right.
want. No, no mortgage payment. Yeah, so it's a perfect
And
answer.
it really is. And it really does make a lot of sense for some people because a lot of people, correct me if I'm wrong, many people that come to you are on a fixed income where they may
Right,
have a nice pension, Social Security, and maybe limited resources inside of their IRA or 401k. And
right.
so to help them kind of enjoy life a little bit, give them some breathing room, we can utilize the significant equity in their property and do a reverse mortgage. Reverse mortgages have different tiers, as you mentioned,
Yes.
FHA and jumbo. You know, uh, is the jumbo loan solution similar to the FHA where they have a little line of credit or?
That you can do one up on both programs. You can either do a fixed rate or you can do a line of credit.
Okay.
Doesn't matter whether it's a purchase or it's a refi. You can do the line of credit if you want to do it. The
Okay.
benefit of the FHA is that the interest rates are lower, but the closing costs are higher. On the
Okay.
jumbo, the interest rates are higher and the closing costs are significantly lower. So that's it. And the loan amounts go up to 4 million. So people like it, for California, that's a nice product to have.
So when somebody's looking at buying a home and they're in the 50s or 60s, and they have a significant down payment, generally speaking, what type of down payment are you looking for in a reverse mortgage? In general, I know it's very age specific.
It is. It's age specific. Basically, the older you are, the less money you need because logistics say that you're going to be around less time. Not necessarily true,
Right.
but so I would have people be thinking 50%.
Okay.
And so that's not out of range. I live in a community where at least 50% of properties are sold cash, all cash. So people do have money, and
Right.
it just erases their payment.
Yes. So as a home buyer, I purchase a property using the reverse mortgage. I put the down payment required to purchase it. What are my responsibilities with regards to the home moving forward from there?
Okay, after you close, you mean?
Yes.
Okay, your requirements are you pay your taxes and insurance, although you can include them, but I recommend really not to because it takes up too much money. And you have to keep your house in order. Look, the roof can't fall in, there can't be mold. You have to take care of it. It doesn't have to be
Gotcha.
prime property, but it needs to be livable.
Give me a recent success story that you have had, a recent transaction. What did it look like?
Okay, this was a refi, and it was for a client in Santa Barbara.
Okay.
And he was had a really, really nice pension plan that he had retired on from a very recognizable company, and that retirement plan ran out. And
Mm,
he thought, well, gee, what do I do now? And he called a loan officer at Guaranteed Rate, who referred him to me. And, now we've replaced that retirement comfort. So he borrowed money to pay off his mortgage, which wasn't much, and has at least like 2 million still to borrow if he wants to on this line of credit. I mean, that's an unusual case, but
right.
that's a person who planned and the plan fell over,
Yeah. Well,
and
I
and
understand it. And it's
yeah,
nice to have that access.
totally, yeah. So he's totally.
And that access, whether it's a large sum or a small sum, the access to future equity after the loan's funded, that can be used for multiple things. The borrower is not limited to how they use those funds, right?
No, they can use the funds for anything they want. It's not taxable income. It's going to be, taxable when it's sold, but I mean, the income
Right.
itself is not taxable. So you can use it for anything. And I've had customers where I can't get them a lot of money, but I can pay off their mortgage. And I say, well, okay, you got a $2,000 a month mortgage. You multiply that times 10 years. That's a lot of money, you know?
Absolutely.
And well, most people don't think of that. Oh, yeah, because you get to keep the money that you used to pay in your pocket,
Right.
So, yeah,
And then from there, now they can do a few things, whether that is take that money that they used to apply to a mortgage, but take that money and pay their living expenses so they can stay out of debt.
right,
Uh, Maybe get that surgery that they've been delaying on because they've been so committed to making their mortgage payment.
right,
And then also make significant property improvements if needed, so
right,
they can, enjoy life a little bit better for their final years and so forth. Yeah,
right,
that's really
exactly.
it is a great solution. And go ahead.
No, it is. It's a great solution, and people, they think, well, I've heard so many bad things. Well, the bad things, were in the very beginning of the program where nobody knew what they were doing. We're talking 20, 30 years ago. And I said that it's a whole new playing field right now, so yeah,
And it's well regulated. The
very,
loan's
oh,
well disclosed.
very well regulated. Yeah. So,
So let's talk about the heirs.
okay.
Down the line, the heirs are going to be receiving the property, and there are limitations to what can happen after our customer passes. What does that look like, generally speaking?
Okay, well, I recommend to people up front that they buy their property in a trust. Okay, and the reason being is because at least the county of San Diego, it takes you about 11 months to get through probate, and probate costs a lot of money. And a trust is a simple thing to do. It's already there, and the property passes in like a month, and you pay the mortgage off or you sell it or whatever. So, I highly, highly recommend to everybody to buy their property and keep their property in a trust for that reason.
I agree 100%. The trust is always living. That's why it's
Hmm.
called a living trust,
Right,
and it never dies. And it allows for the heirs to timely receive the property and take care of business however they see fit.
right.
The court system has done nobody any favors in the last decade, at least in my career. And I'm happy to hear that you give that type of advice to people.
Well, I run a real estate association up here where I live, and I had a speaker come in and speak on that because I found out that there's only 3 probate judges in San Diego County, and it takes 11 months to get to
Ah,
get to one. Yeah, and it costs you a ton of money.
yeah. Well, that's good to know. That's good to
Yeah.
know. Jan, are there any other tips or advice that you could give to someone that is, at the pre-approval stage, debating whether they move forward with a conventional loan or a reverse mortgage?
Okay, they need to do their homework. Okay, and what that is they need to speak to somebody, preferably it's me, but it's somebody that is a reverse mortgage specialist to tell them explain the thing how it goes, do a pre-qualification the way that we do a pre-qualification. And the important thing is that the state of California requires that a borrower wait 8 days to start a loan after they have done all the precursors, which include counseling by a government agency. So, you make an offer on a property and you say, oh, yeah, I got to wait like 2 weeks. They're not, the seller's not going to like that. So it's being
Right.
prepared, knowing what you have to do before you make an offer. That's the
Yeah.
important, very important.
And that's why I always have my realtor partners, refer their clients as soon as possible to me. That's why even if they have another lender out there, that I give them a second opinion, because if I can see that there's a potential that that the transaction might need a reverse mortgage, I want to get them in your hands as soon as possible so we can start that 8-day waiting period before
Right.
they actually can start processing the mortgage.
That's a big
That's
deal.
it's a real big deal because here in
Yeah,
San Diego, it's competitive, and sellers most of the time don't have to wait for their buyers, or they'll just move to another one. So it's
exactly.
good to know. It's good to know that and plan appropriately. Well, Jan, thank you very much for joining me today. It was really great to hear some tips that you have
Thank
in
you.
regards to the reverse mortgage arena. And I hope my audience gets to see that I have professional and experienced partners to help support their business as well.
Perfect.
So thanks again.